Hello, everyone. This is Jeremy Burke from Dryrun. Today, we are going to have another interview with a financial professional. Today, we're going to talk about the more financial side versus the accountancy and CFO side. Today, we have David Aaron from Aaron Wealth Management out of Ontario, Canada. Thanks for coming, David, and please feel free to introduce yourself and talk a little bit about your business.
Thanks, Jeremy. It's a pleasure to be with you. So I've been doing financial planning services for about 20 years now. I've run the gambit in terms of types of people I've worked with, from individuals, families, and business owners, but I tend to really enjoy working with business owners. It's an area that I decided to specialize in. It doesn't mean that I don't work with individuals or families. It just I have particular knowledge and experience that I think business owners have found to be pretty useful. And so I'm happy to talk about those things today. You mentioned right off the top about accountants. I spend a lot of time actually working with accountants, as you might well expect. If you're talking to business owners, they usually have to get a lot of information from their accountant. But aside from that, I do a lot of seminars too with accountants, because there's a lot of information that they really are interested in knowing about how they can help their business owners in a much deeper way.
Perfect. And actually, that's a great segue. So we're going to talk about cash management. So if I have any financial professionals and accountants, which I know I have a large amount of my network, and you are looking to increase the value that you offer to your clients, David Aaron's a guy to connect. So David, let's talk about, maybe we can lay down 3 quick examples of how you go about helping business owners accumulate wealth and basically cash at the end of the day. So what are your 3 primary strategies that you'd like to deploy?
So that's actually an interesting question to propose, because there's so many different ways that I help business owners. In particular, when I think about helping a business owner, they generally have usually a problem. That problem is they're either making so much money that they're trying to figure out how to minimize tax. And so that's when they really do need the help of both an advisor and an accountant. The other thing that I tend to do, which is very different from, at least from my experience of working with or seeing a lot of advisors, is many advisors tend to work from sort of like a catcher, if you will, if you can use a baseball analogy. They're waiting for the individual to have excess money that'll say, here you go, they write a check, and they give it to an advisor to invest. I think that's really not a great, it's a disservice, if you will, with the amount of knowledge that we have to just simply wait for a client to decide, yes, I'm going to put this towards an investment, whether it's a corporate investment or their own personal assets. I think it's a wrong position to be in. And so what I look at is from a different perspective completely. I look at helping a business owner free up cash flow that's on the balance sheet that they otherwise wouldn't have thought of or didn't know that they could use. And then once we get that off the balance sheet, they can make a decision as to whether they want to redeploy it to their business or start to fund their assets, whether it's a corporate asset, or usually in this case, the business owner is thinking about, how do I get money out of my business without paying tax to fund my retirement goals later on in life? So that's where I spend most of my time, is on the balance sheet, trying to free up some assets.
So what are some of those strategies? And I know we're just taking quickly off the top here, but what are some of your favorite ones there that you'd like to execute on?
So one of the favorite ones that you have to, one thing that I've come to notice about business owners is I'm not talking about somebody who's in the business maybe 20 years, because by then they've sort of figured out a lot of the things, a lot of the mistakes they've made along the way. But you think about business owners, they come up with an idea and they say, let's open a business. Many of them quit their regular jobs and start a business. That's a common theme. And so what they really don't have is a great deal of experience of being a business owner. And so what they do is they think like a non-business owner when it comes to doing certain things with their business. And so what I try to do, first of all, is look at corporate structure, and then look at, what kinds of things are you paying personally that should have been paid by your business? Because really, when you're doing that, you're kind of stealing money from your business. And I say that in a kind way. It's not an illegal way, but you're taking money from your business and you're paying yourself an income, a much larger income than you actually need, because you want to fund certain things that could have been covered from the business. That's step one. We want to look at corporate structure, Do you have a holding company? A lot of business owners don't have holding companies. So I'm looking for corporate structure, and then I'm looking at what are the expenses that are being paid by the corporation personally that shouldn't. So that's sort of kind of step one, if you will. After step one, step two would be, what is the pain point for the business owner? So are they experiencing some tax issue? Usually they've got that, well, for the most part, they've got that covered with their accountant, but I'll go in and see whether or not they have been addressing that with their accountant. So that's sort of, are they with the right accountant? Are they, do they have the experience and information that they need from their accountant to be able to mitigate taxes? If not, let's build a relationship around an accountant that can help them. And then the second part of that, if you will, is really just identifying what is the biggest pain point for this person, or their goal, if you will. Are they trying to get money off their balance sheet? Are they thinking about their retirement goals? Are they thinking about selling the business and they need the cash out of the business before they sell, or they prefer to keep it in the business? There's a lot of different things that I work with. So really the question is to the business owner, what do you plan to do with this money that's on your balance sheet? Is that for your kids? Is that for future operations? So we have to establish some goals first before we go anywhere. So that's really the sort of the second step. And the third step would be, what's the best solution to be able to get that money off the balance sheet to be used either in the business or in their personal assets?
Cool. Can you give us a practical, tangible situation there for, let's say, fund and retirement? So let's give you a case scenario. We have a person that's generating $1 million annually a year, been in business for 10 years. They are looking to pull money off the balance sheets and invest in their retirement. What's the strategy for such an individual there?
So that's an interesting thing. So we have to consider, first of all, who is this business owner? What are their ages? Are they married? Do they have business partners? That type of thing. So that's important to consider, because if there's partners, the moment that you start taking money off the balance sheet, the other partner's got to be aware, and that's something that's got to be a much deeper conversation. But let's say it's just a husband and wife, a typical kind of business owner, right? So there is some usually there is some clarity on their goals. So what we're looking at is, what's the business owner? Are they healthy? Do they have any health issues? Do we need to be aware of that they may not live as long? And what is the reason behind wanting to sell their business, if you will, or what's the reason behind how much money they need to push off their business towards their personal goals? So again, we kind of float back to personal financial planning. So even though you're a business owner, it's still your money, and it's about your life and your spouse. So it really does come back to personal financial planning. But in your example of, let's say, having $1 million of revenue each year, this person is likely doing well for themselves. Money is not so much of an issue for them. They probably have a lot of toys and take vacations and so on. So what I look for here is, how are they going to use the money in retirement, and how much money are they going to want to use in retirement? That's the establishing goals. And then who might be the likely client, if you will, who will buy their business at retirement? Is this going to be a succession plan where they're selling the business to the kids? Or is this going to be an outside purchaser of the business? That's very important to consider, because what we use in terms of the solution to help them with retirement is going to be greatly impacted by how they sell the business. But a typical type of business would be if you want to look at the sort of like drop down menus, what I would do, two different things. I would want to look at whole life insurance. This is participating life insurance. It's not the first thing I go to, but if you wanted to just like grab two different ideas that I've had that have worked well with other business owners, a participating life insurance. So what we do is we take the money off the balance sheet. So consider there's money on the balance sheet. They would have put it to an investment anyway, but they have a huge problem. That's the passive income tax rule we have, where they're getting crushed by more than 50% tax on that investment. So what we do is we take a portion of that money each year and we deposit it to life insurance where it is not taxed. So now we've just taken money that was taxable, crushing more than 50% of their return, and putting it into participating life insurance where there's zero tax on the growth of that investment. So that's an important factor right there. And plus, now that we've also likely solved an estate issue as well because of the death claim that would be available. Then the second thing that I would want to look at is, are they using RSPs or not? Some business owners, that was what I talked to earlier, where a business owner thinks like a non-business owner and they put money to an RSP, which is there's a better option. So if they're using an RSP already, they're already doing half, if you will, of the strategy that I would want to look at. And that's called an IPP, an individual pension plan. It's hasn't been used as widely in the past because of the way the government had their laws. They've recently changed the laws and it's come back into favor. And it's a very, very useful tool and one that I love, because what happens is, did you want me to explain like the 30-second thing on individual pension plans?
Do it.
Okay. So if you look at an RSP, the business owner takes money, pays themselves a higher income because they know they're going to deposit money to an RSP. So that's sort of the non-business owner way that most people put money into their retirement plans. And so a business owner should not be doing that if there's another viable option. An individual pension plan allows the business to deposit money to that person's pension plan, if you will. We're creating a pension plan very similar to a teacher, a firefighter, a police officer. We're creating a pension plan, but just for the business owner. That money that gets deposited to the pension plan, the actual credit for that, the tax credit, is going back to the business. So the benefit to the business owner here is we're actually mitigating tax for their business, freeing up more cash to be deposited to their investment. But at the same time, we're providing a tax credit for that business, which is going to be very useful for that business. Now, this is a very interesting thing, the tax credit. How much are they actually getting back? I want you to think now about the opportunity here. Is it something that we need to be mitigating year over year taxes for this business, or are they considering selling their business and they're going to have a huge tax liability when they sell their business? So if they could deposit a larger amount of money, in this case, consider where we might be depositing $700,000 into their pension plan. This is creating a $700,000 blanket, if you will, for us to eliminate a lot of tax for that business when they sell it.
Perfect. And this is just a few of the ideas that David has in regards to the combination of business and personal finance and conversation. So David, if somebody was listening here and wanted to connect with you to learn some more of your strategies and have some conversations, who is the ideal person I should be reaching out to?
Well, as I said before, I work with families and individuals, so it's not as though that I don't want to work with individuals, but given my experience and my age, I really enjoy working with people my age in their 50s. Someone who's been in business for a number of years will say probably, I want to say right away, because if I can get to them right away to establish a strategy that'll help them moving forward, we'll save a lot of money in tax for them, and their investment accounts will be much higher. But the ideal client for me is a business owner in their 50s who's doing well, let's say $1 million or more in revenue each year. And they likely have some issues where they have either a tax issue, an estate planning issue, and they're looking for a better way to actually manage their money, and also have an advisor that just isn't somebody who is on the other side of the equation saying, I can help you with your RSPs or your non-registered accounts. Somebody is actually willing to get in, roll up their sleeves and look at their balance sheet and try to free up some cash flow for them.
Perfect. Well, if you're that individual watching, make sure you reach out to David. I'll have all of his contact information in the links that these videos are attached to. Thank you again, David, for your time, and have yourself a great day.
Thanks, Jeremy. Great speaking with you again.
Thank you. Goodbye.